Hi guys, it's Stock Curry, and man, we had a crazy day today. TD Ameritrade, Robinhood, Webull, they shut down trading on GME, AMC, and a few other stocks. So what in the world happened? Well, let me tell you, I've seen quite a few YouTubers today who tried to explain what happened, and not a single one of them got it right. Every single YouTuber I watched was wrong. The only people that weren't wrong were the ones that flat out said, I have no clue what happened. So I just want to try to explain to you guys what happened today. I'm going to give you the explain it like I'm 5 version because it's pretty complicated and it really takes some insider knowledge, knowledge of investment banking to kind of understand what's going on. The only other YouTuber I think who could even come close to explaining it would probably be the Traveling Trader. He's the only other YouTuber I know of who has investment banking experience like I do. But let me just see if I can explain this in a way that makes sense to you guys. So bear with me. It's a little complicated, but I'm going to do my best to explain it in as simplest terms as possible. So first of all, it was not a conspiracy theory. Citadel did not call Robinhood and ask them to stop trading certain securities. The hedge funds did not call the White House and tell the White House to tell Apex to stop trading. No, none of that happened, okay? Forget all the conspiracy theories. Basically, what happened today was risk management. That's it. It was risk management. So that's the old oversimplified. Let me tell you more detail to what exactly happened. So when you buy or trade a stock, or if you buy a stock, sell a stock, whatever, if you're buying a stock, your money has to move from your broker to some other broker, and then that broker has to take their shares and move it into your broker. So there's this transfer of stocks and money that it has to go through. Now, if every single person in the world had a cash account and there were no options and there was no margin accounts, then it would be fine. There would be no risk because your money would move, shares would move, and that'd be it. But we have risk because we have margin and we also have options, both of which are very risky. Not only to you, but to your broker as well. So let me explain. So if you're trading on margin, let's say you have $10,000 and your broker is going to give you another $10,000. That's your margin, okay? If you take that entire $20,000 of buying power and say you want to buy whatever, GMC or whatever, or GME or AMC or whatever you're going to buy, okay? You're going to take, the broker's going to take your $10,000 plus their $10,000 and transfer that to the other broker. Well, what happens if so many people are trading on margin that your broker literally runs out of money? It could happen. It's theoretically possible that so many people could trade on margin, your broker could run out of money. But wait, it gets worse. When it comes to options, it's not a 2-for-1 leverage, okay? On options trades, the Robinhood CEO estimated that the average value of each option was $10,000. That's for 100 shares. Well, you've got people who are posting on Wall Street Bets. They were up like $4 million, $6 million, $2 million. We are talking regular, normal investors that may have had $10,000 in their account now have these options that are worth millions and millions of dollars. Those are unprecedented levels of money that just has never been seen before in a retail market. And so what happens is if you want to trade that option, so you get ready to sell that option, okay, cool, you're going to send that option contract to the other broker. Well, the other broker now has to take millions and millions of dollars and send it to your broker. Well, what if the other broker doesn't have millions and millions of dollars? It's possible they might not. And so it's all started with Robinhood. It got scared. Now, Robinhood is their own clearing firm. I'm going to explain clearing firms in a second because it's going to be really important. But for now, just understand Robinhood is their own clearing firm. So the CEO of Robinhood is like, wait a second. We've got over $1 billion in retail trades. And Robinhood CEO is like, I know Robinhood has enough money to cover all this, but I don't know if the other firms have enough money to cover all this. Now, large ones like TD Ameritrade and Webull, yeah, they probably have the funds. But what about all the little guys, right? What about like the Ally Bank and a lot of these new startups that are trading stocks that they may not have had those millions and millions and millions of dollars to cover their transactions. So Robinhood CEO got scared and he was like, whoa. He's like, we're just going to limit trading on this. We're going to turn off options because this is getting really, really dangerous for us because these other firms may not have the cash. Now, that might sound crazy to you that Robinhood could be that scared, but let's not forget that back in 2007, Lehman Brothers, Bear Stearns, and other institutions went bankrupt, okay? Doing the exact same thing that is happening right now. Those firms, those institutional investment banks, went bankrupt doing the exact same thing that retail traders are doing right now. So Robinhood CEO was correct, and he was right to get scared, and he put in place risk tolerance to protect his company, to make sure that they didn't end up going out of business because some other broker ran out of cash and went out of business, okay? We're trying to prevent what happened in 2007 here. That's the gist of it. Now, remember I said Robinhood was its own clearinghouse. Here's what happens. When you buy or sell a stock or option and it's getting traded at some other brokerage firm, there's an intermediary who actually handles that transaction. You can kind of think of them as like an escrow company, right? So like if you're going to buy something on eBay, you might send the escrow company your money. The seller will send the product. Once the product has been confirmed as delivered, then that escrow company will send the shares. So there's a risk to the seller that if you were not using an escrow company, the seller might send the product to you. You might not ever send the money. So you use an escrow company, intermediary, to protect both the buyer and the seller. Make sure the buyer gets the product, make sure the seller gets the money. Well, it works the exact same way in the stock market. The intermediary is called a clearinghouse or clearing corporation. So almost every single US and Canadian stock runs through something called the Depository Trust Clearing Corporation, DTCC, okay? All of the investment banks use it. Everybody uses DTCC. Now, on the retail side, most brokers, including Webull, use a clearinghouse called Apex. And then Apex actually clears through DTCC, all right? So this is where it gets a little confusing. So just bear with me. Just think of Apex and DTCC as like escrow agents, okay? So what happened is late in the day, DTCC ended up with the exact same fears that the Robinhood CEO had, okay? And DTCC went out to Apex and said, look, you guys are trading a lot of securities. Now, think about your broker, right? If you buy or sell a stock in a cash account, you have a 2-day settlement rule. The reason is it can take up to 2 days for cash to move from broker to broker through all these clearinghouses and channels and banks and all this stuff. It takes about 2 days for the money to actually move. So while people are waiting for the money to move, guess what? An investment bank, or in this case Apex, has to put money into DTCC as collateral, all right? It's a protection in case some trades don't settle, in case one of these brokerages goes out of business or something like that. So DTCC came out to Apex and they said, look, you guys are doing too many trades. The risk is getting too high. We need more collateral, okay? And I can almost guarantee you that collateral request from DTCC was in the billions of dollars. I know because I used to work at an investment bank, and DTCC, especially during the 2008-2009 financial crisis, was requesting collateral from investment banks all the time because it was getting so risky and it was getting very, very dangerous for DTCC. So that's exactly what happened. We're experiencing the exact same thing that happened during the 2007 financial crisis, only instead of it happening behind the scenes to a bunch of investment banks, it's now happening to retail traders. Only retail traders have never seen this before. They don't understand, so everybody's confused and making up all kinds of crap. But the reality is DTCC said, look, Apex, we need billions of dollars in collateral right now in order to continue processing trades. Apex said, I don't have billions of dollars in collateral to give you. And so DTCC said, fine, we're cutting you off. No more trades. Apex was like, crap, we can't trade AMC or GME or any of these stocks anymore. We're done. So then Apex had to go out to all of their brokers, including Webull and a bunch of others, and say, sorry guys, we can't trade. We can't accept any trades on GME or AMC or any of these others anymore. DTC cut us off. We don't have the collateral. Well, of course, everybody started freaking out amongst the brokerage firms. So Webull and a bunch of others contacted Apex and like, look, can we work something out? Anything. I don't know what happened behind the scenes. I don't know if the brokers gave Apex money that Apex then gave DTCC, or if somehow the brokers contacted DTCC and showed proof of funds. I don't know what happened, but what I do know is somehow behind the scenes, all that got worked out and DTCC allowed Apex to continue trading. And as a result, Webull and all the other institutions were allowed to continue trading those stocks. After that happened, I think Robinhood CEO saw that, okay, my fears are okay. It looks like everybody's got enough money to settle all of the funds and all the transactions that are taking place. So the Robinhood CEO decided to go ahead and lift their restrictions as well. So I hope that made sense to you guys. I know it's really confusing because, there's just so many moving parts that go on behind the scenes that nobody ever sees. But that's really what ended up happening today is a lot of the risk management that was put in place during the 2007 financial crisis to prevent investment banks from going out of business kicked in today, and risk levels were exceeded, and so banks needed more collateral as to prevent somebody from going out of business as a risk prevention, and Apex just did not have the collateral, and pretty much everybody had to shut down trading for a few hours. So I really hope that made sense to you guys. If you guys have any questions whatsoever, I know this is really confusing, put your questions down in the comments below. I will do my best to answer everybody's questions, okay? Also, Informed Trades did put a link to Robinhood CEO. He was on, I believe, CNBC, kind of explaining what I just explained to you. But I don't know if that would explain it any better than what I could explain to you guys, but just know it's not some conspiracy theory. It's not hedge funds or anything. It's just, it had to do with risk management that FINRA required from the 2007 financial crisis. All right, let's get into today's stock picks. Now, I'm not going to talk about these squeeze and short squeezes things anymore. I'm done with it. I want to focus on what's next, what's coming up, okay? Let everybody else go focus on the short squeezes. We are going to focus on the next trade. So I've got a bunch of stocks for you that are undervalued right now. They're below our buy under prices, below our ideal buying prices. They're cheap. Now is the time to buy. So let me tell you what they are. For those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for large investment banks, and now I analyze stock picks from the top 15 YouTubers. Real quick, I might be changing though. Go into the community section and vote if you want us to do the top 15 or the top 10. All right. I then compile all my analysis into a daily video that I post right here on this channel. I spend hours every day watching YouTube videos so that you don't have to. All you have to do is watch this one video each day and you'll get every single stock pick from the top 15 YouTubers. All I ask in return is that you hit that like button and subscribe so that you can get notified when I release my next video. In fact, I'll go ahead and give you 5 seconds to do that right now. All right, before we get into today's stock picks, I just want to remind everyone that I am not a financial advisor and none of the YouTubers I follow are financial advisors either. Today's video is strictly for entertainment purposes only. All right, let's get into it. First up is AAPL, Apple. Larry Jones says AAPL had great earnings, and yet the stock was mostly flat because everybody was focused on the short squeezes. So he used this as a buying opportunity and added more Apple shares to his portfolio. Ken and Grace also recommended buying AAPL. They just had a $111 billion quarter, which is crazy, and more than one analyst has a price target of $170 or above. Now, I put a low buy-enter price on AAPL due to the current market volatility just to keep everyone safe. I have a buy-enter price of $135 and an ideal buy-in price of $115. By the way, if these ticker symbols are too small for you guys to see, all of the stock symbols are in the description, so you can look at the description and follow along. All right, next up is AMC. All right, you guys know I sold my AMC yesterday, and this is why. Larry Jones says he agrees with the movement that's going on at Wall Street Bets, but you should take your money and run. Next up is BEAM. This is BEEM Therapeutics. They're a pharmaceutical and genomics company with a focus on genetic medicines. This is not to be confused with BEEM. Tech Conversations let us know that ARK Invest just started buying BEAM for their ARKK ETF, which is why it was up today. Next up is BEEM. This is BEEM Global, and they're a solar company including solar panels and solar-powered charging stations for EVs. No YouTubers mentioned BEEM today, but I wanted to remind you that this is under our ideal buy-in price of $60. I did open a position on BEEM today. Next up is BNGO. This is Bio-Nanogenomics. Chris Sain said BNGO is at a buy zone right now, and I think it's close. I will reiterate what I said yesterday, that I have a buy-under price of $10 and an ideal buy-in price of $9.50. The stock price might get there on Friday, so get this one on your watch list. Next up is CCIV. This is a SPAC rumored to be merging with Lucid Motors. Lucid Motors is an American EV company and a competitor to Tesla. Stock mode does not see CCIV dropping below $17.50. Now technically, CCIV bounced off of its 1 hour trend line at $20 and started going back up. So I think this is the perfect time to buy CCIV. Plus, the most likely date CCIV will announce a merger is over a weekend or on a Monday. So if you've been waiting for the CCI merger to be announced, you'll want to make sure you are holding this one over the weekend. Also, Larry Jones says he does believe the merger is going to happen. He also said the last night and today were great buying opportunities, and he bought more CCIV. And if you missed yesterday's video, I also bought CCIV yesterday. Next up is CRIS. This is CRIS, and Chris Sain has been watching the stock for a long time. Last week he said it wasn't quite time to buy, but it was getting close. Today he said it was time to buy. I also looked into the stock back in December, and I agree with Chris Sain on this one. My buy-enter price is $10, my ideal buy-in price is $9, and my price target is $20. Next up is DKNG. This is DraftKings. They're an online sports betting company. Smart Trader let us know that DraftKings came out today and said they are releasing their Android app. That news just expanded DraftKings' market substantially. DKNG is trending upward on the chart, although it has strong resistance at $57. But if it can get above $57, it should get back to all-time highs. So you might want to get this one on your watch list, especially with the Super Bowl coming up. Next up is ECOR. This is ElectroCore. They manufacture an electronic device that is designed to help with pain relief, thus lowering the need for prescription painkillers. Mcash gave an update today. This stock was up 300% since he first mentioned it last week. It is now getting short sold, although other institutions are buying. So personally, I think this dip is a good buying opportunity, although it will probably dip more. I'll put my buy-enter price of $2.75 and an ideal buy-in price of $2. Next up is GME, GameStop. Alright, for those of you who don't know, this short squeeze is not about making money. It's about the cause. People in Wall Street Bets hate market manipulation, and they hate the fact that short sellers were able to short 140% of the total shares outstanding in this company. I agree. It is ridiculous that someone should be able to short more shares than exist. But just know that this war, like all wars, costs money. Wall Street Bets doesn't care if they lose. They just want to destroy short sellers. So that said, can you still make money on GameStop? Sure. But just know that you're basically gambling. And also know that your best chance of making money is day trading GME, AMC, and others. Next up is HIMS. This is a SPAC, and they're merging with Hims and Hers, which is a telehealthcare company. This can be compared to Teladoc, ticker symbol TDOC. Tech Conversations let us know that ARK Invest just started buying HIMS. They added HIMS to their ARKG Genomics ETF, and that is why the stock was up so much today. Tech Conversations says that you might want to wait for a pullback before buying, but there is no guarantee there is going to be one, since ARK Invest is expected to continue buying this stock. Next up is KOSS. This is another short squeeze, and again, Larry Jones says he agrees with the movement, but take your money and run on this one. Next up is MSFT. This is Microsoft. This was in consolidation for months, but today it broke out above its level of resistance after great earnings. So it has great financials and great technicals. Smart Trader bought MSFT today, and don't forget that on Tuesday, Christine recommended you buy MSFT also. This is a great long-term hold. Next up is NIO. This is a Chinese EV manufacturer. Ken Gray said NIO is down from its high of $66, but he said any price you buy it at is a good price for a long-term hold. Tech Conversations says that he added 100 shares of NIO to his portfolio today. Tech Conversations also showed us that Morgan Stanley just raised their price target on NIO to $80. And Ken and Grace let us know that WalletInvestor.com gave a 5-year price target of $493. That represents an 845% upside from today's closing price. Next up is RKT. This is Rocket Mortgage. Stockmo said RKT is getting close to support at $20. He said the stock could go up 40% and is still a fair value fundamentally. I agree with all of that. I have a buy-in price of $20 with an ideal buy-in price of $19, and Stockmo has a price target of $31, which would represent a 45% upside from today's closing price. Next up is TSLA. This is Tesla, and they're an American EV manufacturer. Stockmo thinks that if TSLA could produce the kind of numbers that they did during the pandemic, then as we move post-pandemic in the next 6 to 12 months, this could be a monster. Stockmo thinks this is a good buying opportunity. Ken and Grace also said that it is time to scoop up TSLA on the dip. Now I do want to warn you to be careful when you place your orders. See this stock here? It's TLSA. This is not Tesla, but a lot of people have been buying it thinking it's Tesla. So when you place your order, make sure you type in TSLA and not TLSA. Those typos are costing some of you a lot of money. Next up is TTOO, T2 Biosystems. This is a genomics company similar to BNGO. I really like the dip we had today, and I did open a position on TTOO today. My financial friend covered TTOO today. TTOO had a 155% revenue growth year over year last quarter, so this company is growing quickly. Now there is a risk that TTOO will do a share offering, and if they do, you might get another dip buying opportunity. Also, I agree with something else my financial friend said today. He said that money is flowing out of just about everything and into stocks like GME and AMC. But now that GME and AMC have dropped 50%, I think we're starting to see money flow back into regular investments. So I personally think that now is the best time to buy TTOO, and that's why I opened a position today. And for those of you who like to follow what I'm buying and selling, I opened a new position on LPCN, which we talked about a few days ago, and I also opened a new position on GE because of their announcement that they are going to switch to producing 100% electric vehicles by 2035. Next up is UWMC. This is UWM Holdings Corp. They are a wholesale mortgage company, and this is a recovery play. They have earnings coming up on February 4th after the market close. Stockmo said Wall Street is expecting earnings of $1.40 per share. Now, if you divide today's closing price of $9.96 by $1.40, you get a price to earnings ratio, or PE ratio, of 7.11. Compare that PE to Rocket Mortgage's PE of 8.81. Stockmo said 11.15, but it's actually 8.81. And that means that UWMC has more upside potential than RKT does. Now that's what Stockmo said. Stock Curry says those two PEs are very close to each other, and different companies in the same industry will always have different PEs due to differences in future growth prospects of each company. And since UWMC is a wholesale lender, and RKT is a consumer lender, I think the PE ratio difference makes sense, given that RKT probably has more future growth potential than UWMC. All of that said, I do think both of these companies are undervalued and on discount right now, and both could potentially double once our country gets back to normal. But I do think that both of these companies have more room to drop, so I would recommend you put these on your watch list and keep some cash available to buy one of these once they bottom out. Next up is VGAC. This is a SPAC founded by Sir Richard Branson, the owner of Virgin Galactic, ticker symbol SPCE. There's no merger target yet, but they are rumored to be merging with Virgin Orbit. Larry Jones let us know that he is still holding despite the recent run-up in price, and that he plans to continue to hold VGAC through the merger and long term. He also said that as VGAC was going down yesterday, he bought a little bit more. Larry Jones says that he believes VGAC is in the same position as CCIV. He believes that this merger is going to happen. Next up is WKHS. This is Workhorse. They're an American commercial vehicle manufacturer getting into EVs. Jack Spencer spoke with Steve Schrader, the CFO of Workhorse, yesterday, and he posted his video today. So let's talk about what Steve Schrader said to Jack Spencer yesterday. First of all, regarding President Biden saying that he wanted to convert the entire fleet of federal vehicles into EVs, Steve Schrader said this was huge, especially since Biden just said it 5 days into his inauguration. Steve also said that the demand for commercial EVs is already there from fleet managers, and now the EV manufacturers need to start producing. Supply needs to keep up. Steve Schrader also said that Workhorse's current backlog is 8,000 vehicles. He also said that the price order for 6,700 vehicles really does not start kicking in until next year. Part of that reason is because Workhorse needs to get their production capacity up and fill their past backlog first. Another part of the delay is because Pride Group still needs to build infrastructure and financing before they will be ready to accept Workhorse's EVs. Workhorse's current goal is to get capacity up to 5 vehicles a day by the end of March, by the end of Q1, and then 10 vehicles a day by the end of Q2. If they can hit those targets, then they will deliver their goal of 1,800 vehicles by the end of this year. So despite their new orders, their milestones have not changed. Regarding the Horsefly drone, Steve Schrader said that they are still going through the FAA approval process. They are also currently in talks with commercial customers who might be interested in the drones, but nothing can happen until they get FAA certification, which is still about 18 months away. Now, regarding COVID, Workhorse was shut down for 5 weeks due to a COVID outbreak, which killed their Q4 numbers. But they are focused on hitting their production numbers for Q1. Regarding their batteries, Steve Schrader said they are looking to add more battery suppliers to ensure that they will have enough batteries to keep up with their deliveries. But Steve did not tell us who their new battery supplier is. Finally, Jack Spencer asked about Workhorse's upcoming refrigeration vehicles. Steve Schrader said it is in the engineering phase and they are working on it along with the C1000. They are also looking to develop a Class 2 vehicle designed to compete against a Mercedes Sprinter or Ford Transit, because that market is huge compared to the vehicles they currently have. Steve Schrader said that Workhorse hopes to introduce a Class 2 vehicle sometime next year. Alright guys, I hope you enjoyed this video. Comment down below if you have any questions whatsoever about what happened with the brokers shutting down trading on GME and AMC and others today. I'll do my best to answer your guys' questions and help explain it in the best way that I can. Alright, if you want to get some free stock, sign up for Webull in my link in the description below. For a few more days, they're going to give you 4 free stock. They're going to give you 1 free stock. Helps you out and also helps the channel out. Finally, remember to hit that like button and subscribe if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.